Welcome back. It's time for First Call, when the BNN Bloomberg viewer gets an opportunity to put a question directly to an investing professional. Today, that's Brianne Gardner of Velocity Investment Partners, Raymond James. And Jimmy is on the line from Welland, Ontario. He's caller number one. Jimmy, thanks a lot for calling. What's your question to Brianne?
All right, Paul. I have a question for Brianna this morning following your articulate narrative this morning and feelings around the market, the emotional integrity, etc. I'm calling about bird construction, what your professional expert opinion might be, maybe your insights towards adding this to a portfolio. Thank you.
Thanks, Jimmy.
Yeah, thanks, Jimmy. Bird Construction is not a stock that we do own, but just looking at the stock across the board, I mean, fundamentally, it looks to score 9 out of 10. I mean, you have seen a significant sell-off kind of since that October 2024 high there with the stock, and then short-term, I mean, hasn't rebounded yet. Obviously, a lot of stocks in the construction and operating service and market within Canada are potentially going to get hit by some of these U.S. tariffs. And I do think that some of these tariffs are going to set a slower pace for home building in Canada. And we are seeing that data already show that. Looking at bird construction again, I mean, right now you're seeing a little bit mixed between a buy and outperform. People are saying, and analysts are saying, you could see potential upside target of over 50%. Again, that is quite a strong return. I will add it to my watch list, but for me, it is still on a downward trend, and I haven't seen that reversal yet. And I would just be a little bit cautious from an entry point standpoint, just waiting and see with these tariffs.
Okay, and Jimmy, I can tell you Bay Street analysts are positive on the stock. There are 8 analysts who cover the stock. 7 say buy. All 7 of those buy ratings have been issued since March the 13th, so they're fairly recent. Okay, let's go to Anita. She's on the line as well from Markham. Anita, welcome back to our show.
Good morning, Paul and Brianne. Thank you for taking my call. Mine is a rather general question. Brianne, could you recommend the sectors that I should be buying on the dip, if at all I should be buying right now? I'm at my wit's end with this market. I thought I was well diversified, but I was a little biased towards tech stocks, and they have gone down steeply. So I was just wondering, I need your advice as to what I should be doing right now. I'll hang up and listen to you. Thank you.
Yeah, thanks, Anita. Again, I always advise investors to make sure you're taking profits along the way, especially when you are seeing concentration in the market or in an index like the S&P 500, where we did see kind of those Mag 7, excuse me, making up over 30% of the index at one point. So for us, healthcare, again, would be a sector that we are extremely still bullish on. Stocks I like in that sector: Merck, UNH, AbbVie, Eli Lilly, TMO, and Abbott. I do see strong earnings per share growth in healthcare. Also, if you are a little bit concerned still about market volatility, healthcare is a great defensive sector that does tend to do well when there is heightened volatility or even concerns about a recession. It does tend to outperform there.
Thanks, Anita, for your question. Let's go to an email. This email comes from our viewer, Rob. Subject is Capital Power, ticker symbol CPX on the TSX. I got in cheap in 2024 for $37.50. Have enjoyed a great return. It recently pulled back from its high in late January from $61 to $51. What are your thoughts going forward in 2025 with the U.S. tariffs now in place?
Yeah, thanks for your question. I mean, Capital Power, I believe, was my top pick for 2024. I still like the stock. We actually recently added at 52, currently trading around 49, I believe. Yeah, 49.03, you can see there. Yes, has experienced a sell-off, but we are still bullish on the stock. Continue to hold it. Again, recently we are still collecting a nice dividend yield of about 5% in it. Again, ranks 9 out of 10, even from a value perspective. And we see about 35% upside from here in the stock. So again, a company that we are still holding and have recently added to.
Okay, and I can tell you, Rob, that 8 analysts say buy on Capital Power, 3 say hold, and only 1 says sell. Let's go back to the phones. Daniel is in Markham, Ontario. Daniel, thank you for your call.
Hi, Paul. Hi, Brianne. May I have your thoughts on Dollarama? Is Dollarama on your watch list personally and for your client's portfolio to buy? And if so, what is a good entry point to buy? And also your value score. And as usual, Brianne, great host, great guest, and Paul, great host. Thank you.
Thanks, Daniel.
Thanks, Daniel, for the question. Yes, Dollarama. I do like Dollarama. We continue to hold Dollarama. I do think, again, if you are concerned about market volatility or tightening the belt on consumer spending, some of these lower chain stores like Dollarama will continue to benefit. I do think, safer, you're thinking Costco, Walmart, and Dollarama, and you can see that uptrend that Dollarama has still participated in this year. I mean, you're not getting a huge dividend, but you are seeing that growth and that stability over the long run. I think across the board, you're seeing a blend between kind of buy, outperform, and hold, but we still like Dollarama.
Thank you, Daniel, for that question. Thanks to Brianne Gardner for joining us again. Always good to have you here, Brianne.
Thanks for having me, Paul.
Brianne Gardner was our featured guest. Most of all, thank you for watching. That's it for us on the street. Time to turn things over now to the open here on BNN Bloomberg. As we go, a quick look at the TSX market site.